TAQ Capital, technical analysis quickly.
This is not financial advice. I am not a financial advisor. Before taking any action based on the information provided on this channel, it is recommended that you seek the advice of a professional licensed financial advisor.
Let's do this.
All right, welcome back to the channel, everyone. My video went a little bit longer on Bitcoin earlier, so I'm going to try to do my Ethereum one here faster. This is the daily on Ethereum, and we've got our 1, 2, 3, 4 hits in this wedge that we've been in since December 1st of last year. And I know that the bulls are really hoping that we're going to do a breakout here, but I think we've got more bearish action before we take off. Now, I don't know exactly what dollar amount we're going to get down to, but I'm willing to bet it's going to be in the hundreds. I don't mean like 107. I mean like 500, 600, somewhere in there before we actually get that breakout. And obviously with Bitcoin being king, Bitcoin's going to govern, and I still stand behind Bitcoin's got to hit 10,000, maybe even 8,000 based on what the wedges and charts are showing us. And that's all I do here, technical analysis. So if there's some big news event and so on and so forth, you've got other channels for that stuff. I'm just going to break down what the charts are telling us. So what I'm going to do now is zoom in on this area. So this is the 4-hour chart. Our most recent breakdown started, well, arguably at 4 p.m. on Eastern Standard Time on the 25th of August. And we've got our first hit here, second hit, third hit, fourth hit, and now we're working our way over. Now you can see these wedges. The white wedge is coming, almost straight across. The blue one's also really high. And this red is a wedge that we've been in for some time. As you can see here, the red wedge was the peak of the June 18th wedge that we were in, which is this much bigger purple wedge that you can see here that we started back here on June 18th. So we did the 1, 2, 3, 4, tried to hit again, didn't, and now we're coming crashing down to this purple wedge. Whereas if you look at Bitcoin, for instance, Bitcoin's June 18th wedge are these yellow lines, and we rode across it and then broke down out of it. So we're out of this wedge on Bitcoin, but still very much in it on Ethereum. So let's zoom back in. This red wedge that started August 14th gave us 1, 2, 3, 4, and now we're working our way over. This was not a hit because we hit there. So this could be our first attempt at a breakout, or it could actually be the breakout itself. Based on the blue and the white wedge, I think it might be the breakout itself. So what does that actually look like for us? Well, for one, we'd have to have at least a 10% rally from where we're at right now. But for us to actually break out of this thing, I think it's going to be more like 11.5%, 12%, possibly even as high as 13, which would take us right around in here from where we are right now. But I think we've got some like a little downturn here shortly. And for that, I'm going to zoom in on this area that we have been in since the most recent meltdown that started back on August 25th, where we had our first bottom on the 26th at 4 p.m. And then we actually bottomed yesterday at 8 p.m. So we had a meltdown going right into the Monday candle, and now we've been taken up. So if I zoom in more to the 1 hour, which is actually about to change, it's 10:59 a.m. here Eastern Standard Time. So when this kicks over to 11, if this Kijun dog ears left like this, while this stays up or even goes up a little bit more, though granted, it's possible that it'll just dog ear with it, it's going to start calling this back down, which you can kind of see has happened anyway, because we've got a big wick here. So if I zoom out and look more at the 15-minute chart, you're going to see that sort of thing already. So yeah, we dog eared like that, and we're calling the candle back down. But this is only the 15-minute chart. You guys know it's not all that reliable. So the 11 o'clock just hit. On the 15-minute, we came up a little bit. On the 30-minute, we have just come over straight, but the Kijun is merged with it, which is kind of a bullish sign. And then on the 1 hour, we did that. We did the exact dog ear. So I tend to think on the next hour, we'll come up like this, with the Kijun will continue to come straight. And we're going to be pulling these candles back down so we can break out of this blue wedge. So if we're breaking down and out of this blue wedge, where are we going? Well, based on the Fibonacci retracement tool that I've got here, we've got the start here of this run. We ran up there, so now we're going to retrace. Well, these 3 lines here are what we use for our guide. We're at least going to hit the first one. On a rally, though, this substantial in a bear market, this might be a blip in a bull market, but in a bear market, this is a pretty good rally, okay? So I think what we're going to be doing is coming down to what's often the case. We're going to split the difference between this one and this one. So we're going to come right in this area, which will be right around 1442. Now, because of this bullish activity that we've had, and the fact that we've got bullish divergence here, you can see on the RSI, we've got, well, first off on price, we've got a hit there and a hit there. This one is lower than this one. Whereas when you look at them here, this one is higher than this one. And this is what we call a bullish divergence, which is a bullish sign. So we've got an indicator that we're going to take off from here. And that's exactly what we did. So this could already be dead now because it was only on the 2 hour. It didn't even make it to the 4 hour. So this bounce has been significant because if the crash was significant enough to cause the divergence, then the bounce is going to be pretty substantial. And you can even see more here if you drag it out to this one. You've got upwards, whereas here, from here, you've got downwards, so it's even more. And when you're doing bullish and bearish divergence, you don't really want to go more than, say, 25 candles tops. And this is a 22 candles. And that's why I took it from this one instead, because it's less. And if it still holds up, then that's great. It's 13. And when I saw that happen, I knew this was going to take off. That's where I jumped in. Anyway, so we rolled this up here. We're going to do a pullback before I think we go up again to right around the $1,600 mark. So what does that look like? Well, the candles will, like I said, will start to come back down here. I think this is going to kind of grow out some more, maybe stand up here and then do this and stand up again. Maybe the work starts to wrap around while the Kijun continues to go straight. And then at some point, they're going to cross. The Kijun is going to come down. The Tenkan is going to run like this. As these candles continue to go down like this, where they hit this right around the 1440 mark, then the Tenkan is going to swoop it up, pull it back into the space, and then we're going to move off again. So what that does to our wedge is we can either adjust the blue wedge or we can create a whole new wedge. So for now, for illustrative purposes, I'm going to create a whole new wedge. I'm going to say we end up doing something like this, where this will become our second hit, with this being our first. And then I'll draw another one, because this will come out here to the 1440 mark. Zoom out a bit. And then we'll have something like this, where we had 1, 2, 3, and then we'll come up here. Well, sorry, it's too high. More like here around this $1,600 mark, where the green will cross. So let's adjust that a little bit. Okay, so 1, 2, 3, and then 4. This will get us to the $1,600 mark before we come crashing down. And this is a good point too, because this is the red wedge that we've been in since the peak of the June 18th rally. So if we had our 1, 2, 3, 4, we came close. This could be our breakout. So if we hit that $1,600 mark, we might even do another one of these before we go out. This is a guide though. It's not 100%. I mean, nothing's 100%. So as we do this and then come back down, we could blow up out of this, out of the blue, out of the white. There's the end to the red, blue, and white wedges. And then we're going to start a whole new wedge that'll look something like this. It's the green wedge that I just drew here. So then we would have 1, 2, where are we at here? 3, and then we would come down into the green, which is again taking us into these hundreds area. This would be 4 somewhere down here. Then we would go out and have our breakout. Now, obviously, I'm loosely drawing this, but this would not be a hit, so I shouldn't have drawn the green line there. The green line would be, more out here like this. So it would look more like this, where you've got 1 up here, 2, 3, and then 4. Now this line here is the old green wedge that we were in that is going to act as support. So we could be bottoming out around the $600 mark before we start to make our way out of the green. And then all these wedges will get closed in this run up to the green spot right here. And we'll be working our way back out to the orange by the end of the year. So that's my prediction. And if you want to do some scalp trades in here, I think that's a great idea. Briefly, you can see that we're starting to come down. We're way outside the Bollinger Bands. I mean, this one shot way high. We're still operating outside entirely, at least on the 1 hour, from the Bollinger Bands. And I think the Bollinger Bands plus the call from the Kijun is just too much pressure to where we are going to come back down here. So hang tight on that. But I do want to show you this before I'm done. And that's here. This is the Ethereum chart that I use the most. And that's because it's got all my Fibonacci lines in it that you can see if I zoom out here, and Fibonacci circles and so on. But you can see as we came down here, we broke through this Fibonacci line and found support right at this one and turned around. So I would imagine that we're going to be looking at this Fibonacci line being resistance, this Fibonacci line being resistance, and so on. So let's redraw that wedge. All right, so this is a recreation. And this yellow wedge that actually started back here, where we hit here, then bounced up to there, and now I've come down to here. We're going to go up somewhere past this purple line. We don't know where this is going to go, and then break out of that. So if we do say we're going to challenge this 1722 line, which was established back here. You can see we challenged it there, we challenged it here. If we re-challenge it there before we get rejected, and we compare that with our Fibonacci lines, we're talking somewhere out in here. So then if we've come up like this, we're going to do the retracement that I said, and then we're going to shoot up again for another one. We could break out of that, and then kind of flop over, ride this down for a minute, while we run back up one more time, get rejected, and come down. So this Fibonacci line would be the way to look, or there's something to look for. And it's possible that it's just going to shoot straight up here and hit the Fibonacci line there. I think this is too much of a run. I don't think that's going to be possible. But we'll do it in zigzagging fashion as these charts work. So we did this. We're going to come back down now. We're going to do this. We're going to come back down there. We're going to do this, possibly to there. And then that's the fizzle out, and we're down. Something to that effect. And I'll know more as it unfolds, and you can follow me on Instagram for the more frequent updates, because it's much easier to do from my phone than it is to sit here and put something together on the computer. But YouTube is great for daily, and then for repeated updates throughout the day. If anything worth reporting on happens, that'll be on Instagram for me. But that's all I've got for you guys today. I just wanted to point out the perfect support that we found here on the Fibonacci line. It doesn't get any more perfect than that. As we do our little bounce up here. So if you're going to get into a long, don't get too comfortable. Keep your eye on this area up here around 1722. But that's it for me. I appreciate you guys. Like, share, and subscribe, and have a great day out there.